Stocks on Wall Street falling Monday afternoon after Warren Buffett disclosed that Berkshire Hathaway dumped airline stocks. For more on where the market's headed, let's go out to Houston, Texas, where we're joined by George Ball. He is CEO of SMH Group. Thanks a lot for joining us, George. How are you?
Thanks, Fred. Glad to be with you today.
Glad to have you with us. Now, George, Warren Buffett said over the weekend that his company dumped its airline stocks. But in addition, he said he did not see any attractive investments right now and sits on that pile of cash. Should investors be taking heed from him and doing likewise and stay on the sidelines instead of driving up stocks?
We're in an interregnum period right now. We've stopped the pandemic panic selling, which is emotionally laden and was moving the markets hundreds of points on every threat of a greater spread and the like. And so now I think investors are pausing to look for the new normal, and they don't know what it is. So it's like the period, I'm not old enough, but just before the start of World War II, everybody knew there was going to be an invasion. They didn't quite know when or who was going to win. And that's what the stock market's doing now. It's interesting, Fred, the domination of algorithmic trading, which is more than half the volume in the markets now, is less than it was before because the algorithms aren't designed for what's happening right now. Volume is down, people are looking, and it may be an opportunity for enormous, at least middle term opportunity, good or bad.
I see. So you see opportunities. What about stocks? How much upside do you see for stocks at these levels, having rebounded so sharply from March 23rd?
Let me be a politician and not answer your question. There's a lot of risk in the market right now. There's quite a bit of opportunity. But the oddity in today's market, more than any in the recent past, is if you assume the most probable event, stocks don't go up or down. They're perfectly priced right now. This is the new normal. This is equilibrium. There are all sorts of publicly traded equities that could be worth 50 or 100% more without stocks going up or down. So I think the bet now is find things that are just so enormously attractive that prices don't have to go up. If prices do go up, they'll float with the rest of the boats and even more. It's a very exciting moment in investment stock picking time.
Equilibrium, you say. Then what sectors do you see or type of stocks offering the most opportunity at this juncture?
There are some out of the biotech in the healthcare area that are enormously attractive. There are a few smaller high-tech stocks that are extremely attractive. There are quite a few what I'd call diversified industrial conglomerates that have just been whipped unmercifully. There are a bunch of companies, BDCs in the main, that lend to small companies where they think, well, there may be huge loan loss exposure that's not there. They're extremely cheap with very high dividends. MLPs, master limited partnerships, also.
Well, if we are at equilibrium, as you say, is it too late to get into the big tech titans that have been leading this bounce back? The old Alphabets, Amazons, and,
I want to say one very unpopular thing. I think it's awfully late in the game to be piling into those stocks. Not today, not tomorrow, but my sense is that they are in something of a bubble phase. They're great companies. They've got a lot of cash. They're earning money. They're growing. But at some point, enough is enough. Just like the bull market from 2008 up to now is 10 years old, something had to happen to turn it over. And I think if you take that group of 5 or 6 FAANGy sorts of things, it's too late, and the perspicacious investor might be looking to exit rather than to enter them. Not today, not tomorrow, but sometime soon. A bubble is a bubble.
All right. Thanks a lot, George. Thanks for sharing your perspectives. We'd love to have you back on the program.
All right. Enjoy it. I'd like to. Thank you.
All right. Take care. Our thanks to George Ball of SMH Group coming to us from Houston. I'm Fred Katayama, and this is Reuters.